Good morning, everyone. I'm Charene Nortier, and I'm from the Conduct of Business Supervision Division at the FSCA. And I'm very glad to be able to welcome you to this workshop on the Omni-CBR, specifically for banks and payment providers. Today, we are very fortunate because we have Sindiswa Makhubalo, who is the head of department for the banks and payments providers at the FSCA here with us to welcome and to introduce the workshop. Cindy, we're very pleased that you could make some time available and that you were able to join us. Can I hand over to you, please?
Thank you, Charene. I hope you can hear me.
Yes, we can. Thank you, Cindy.
Yes, and a very good morning and a very warm welcome to everyone on the line today. I'm super excited, Charene. I would not miss it for a second because the colleagues that are on the line from the banking industry will understand that this is such an important milestone for us as the banking industry because we have not had something of this nature before. In fact, we have not even started any form of formal reporting to the FSCA from the banking side. So the Omni-CBR for us is going to be so important. And I'm super excited. And I'm hoping that all the colleagues that are around the call today are as excited for us. So welcome, colleagues, to this engagement today that we are hoping to be a very, interactive session. We are looking forward to all the questions that you possibly have that we can engage on today, as my colleagues will be unpacking the roadmap that we have recently published with regards to the Omni-CBR for in particular for today's session for banks. And I'm hoping that you have started to look at the communication that was issued out. I'm hoping that you have started to think around, what are some of the questions, what are some of the challenges that you may face going forward as we work towards implementing the Omni-CBR for banking industry. And I would like us to really use the session today to engage in terms of what is it that you have picked up, how can we make it better, what are some of the things that you think we missed out that you can even add to the Omni-CBR journey. So on my side, joined by the banking team from the FSCA, a very warm welcome. I think for us, we said in our strategy that we amongst many other things that as the FSCA we want to do, we want to be a data-led regulator, and data for us is going to be so key in terms of how we supervise going forward. We also engage many of you around some of the principles that will guide our supervisory approach. And those principles really requires that we are very close to data. I mean, how we will not be able to be intrusive, we will not be able to be intensive without any form of data. So those that Omni-CBR for us is really going to play a massive role. And I think even for you on your side, it's really going to help you a lot. And as I know that a lot of banks today are really working towards making sure their data is right and really understand the importance of data. So I really want us to approach that session with that in mind, that there's so much that hinges around getting this right. So your input is so valuable, and I'm hoping that as we are going towards the date of the 10th of August, in terms of some of the comments that I would like to see so many comments coming from this industry, more especially Charene, because it's going to be a new thing. It's going to be the first of its kind when we get to a point where we implement. So I'm really hoping that you can iron out and engage each other on a lot of things that we possibly may have missed, that you think we must add, that you think we may approach differently, whatever the case may be. So thank you so much. A very warm welcome. And I'm going to hand over Charene and Juanita Juanita. Thank you so much, colleagues, and a big thank you to Nosipho as well and Francina from our team, who've really played such a critical role in getting to where we are from the banking side. So thank you, Charene, and I'll hand back over to you. Thank you.
Thank you very much, Cindy, and we're very pleased to have you and your colleagues on the line with us today. We also have people with us, Juanita, that you've mentioned, Johan, who's going to help if there are any questions around the legal aspects of the Omni-CBR. And then we have Akashan with us, who's really critical because Akashan has helped us to keep all of the workshops going and sorting out administration issues. So one of the problems that we picked up with the previous workshops is that there were some people who had some logistical issues with customizing the spreadsheet, the Omni-CBR spreadsheet, so that they could see various options on the company information sheet specifically, and that would then impact their ability to customize the rest of the workshop. So I'm just going to hand over to Akashan to just explain how do you solve that technical problem if that has happened on your workshop, on your worksheet, because some people had the problem on the spreadsheets, some people didn't. And just to make sure that everyone can actually play around with the spreadsheet so that you can see all the questions, Akashan's just going to explain to you how to deal with this, and he's also going to post the instructions in the chat functions. And then after Akashan has explained that, I'll explain to you how do you participate in today's workshop. Akashan, over to you.
Thanks, Charene. Good morning, everybody. Okay, so in our previous workshops, we also had a question where the industry asked where do they find the Omni-CBR spreadsheet. So I'm going to take you from the start. So this is our FSCA homepage. So we'll go to regulated entity, regulatory framework, and we go to industry communication. Oh, sorry, let me share my screen. Sorry. Okay, so let me go back. Okay, so on the homepage of the FSCA website, we would go to regulatory framework, and we go to industry communication, and then you will click on general, this little plus sign. We'll click on FSCA communication, and it's the first zip folder on the top. So when you click on that, the folder will download. You open the folder, and then you will find the spreadsheet, the first attachment there. So if you open the spreadsheet, you click on enable editing. Yeah, and then you start customizing your sheet. So when you go to company information, I'm just going to select the type of customers here to show you what happens. So once you select your information over here, the spreadsheet's supposed to open up below line 26, and it doesn't do that. Even if you click on customize, it gives you an error which requests you to enable the macro. So all you need to do is go to File, click on Options, click on Trust Center, yeah, and then click on Trust Center Settings, and then Macro Settings. Click on Macro Settings, and then you click on the last one that says Enable the VBA macros. All right, once you've done that, you click Trust Access VBA Project Model, and you click OK and click OK. All right, you then need to save the worksheet. So you can save it on the desktop, or you can make a folder that you want to save it in. So just for this exercise, I'm going to save it on the desktop. and then you save it as an Excel macro-enabled workbook. Desktop, save it. Then you close the worksheet. Yeah, and then when you go to your desktop, you'll find it on the desktop with a little exclamation mark on the spreadsheet. And when you open it, you go back to company information, right? And then if you just reselect your information here, the spreadsheet opens up below line 26, and then you can carry on editing your spreadsheet. Okay, thank you.
Thank you very much, Akashan. We are also going to be hosting just a quick one-pager to explain to people how to do this on our website. And what you will see in the chat function right now is the links to the 3 webinars that we pre-recorded. And in the 3 webinars that we pre-recorded, we addressed various aspects. And I'm going to ask Juanita to take us through that just now. But just as with any other meeting, there are a couple of house rules, not a lot. So the biggest house rule is how do you participate in this so that we can make it as interactive as possible. You have 2 choices as how do you participate. You can either type your comment or your question in the chat function, or you can raise your hand and we will give you microphone access and you can then talk to us verbally. So we would love to hear from you, and you can use either or both of the methods, the chat function or the raising your hand function. And we would love to talk to you and hear what your hopefully positive feedback is. But also, of course, if you have any concerns or any questions, we would really like to know that. I am going to give us a tea break at about 12 o'clock. That's about halfway through the scheduled time for the workshop. I know people always want to know when will there be a break, so I'm planning to give a break at about 12. Juanita, can I ask you to just explain a little bit about the background to the Omni-CBR while people are starting to get their questions ready, and also just talk very briefly about the 3 webinars that we've pre-recorded.
Morning, Charene. Morning, everyone. I think Akashan decided that I spoke too much in the previous workshops, and he didn't want to give me a mic today. So sorry for that. Yes. So if we look at and maybe also while I take you through our webinars, and I think it was wonderful how energetic Cindy is about the Omni-CBR. We share our passion for this offsite monitoring tool and what we can do with it. And I think we're also very excited because we know the banks industry, and when we look at data maturity between the different sectors in the industry, how great and how far evolved the banks are without even realizing or knowing it. It's just about building the right reports to get these market conduct indicators. In the 3 webinars that we had, and I really recommend that you watch the webinars before you give comments by the 10th of August. The first webinar is really about what is the background? Why do we need the Omni-CBR? Why is it an important supervisory tool? Where does it fit into our supervisory framework? What gives us the legal right to ask these questions, because we get that a lot, and we expected that. I think we've learned a lot from the insurance industry and the CBR that we have there, where the insurers are currently actually reporting on the conduct of business return. This is a second step for them. It's phase 2. We're going into more detail. This is closer to what we wanted to ask with them from the beginning, which is 5 years back. We've learned our lesson to take it more a staggered approach. So that is why certain industries have a much lighter version of the CBR, or of the Omni-CBR than other industries. And we acknowledge that also in that first webinar, where we say, we took proportionality into consideration. We took the risks of what is in each sector across the industry into consideration. And that is what we try to see in the all sheets, where we have questions that we're asking every entity in every sector across the industry, the same type of questions. If it's not applicable to you, you say 0. But we're not removing the question at this stage, because we're not going to work from the assumption that certain questions are not applicable to your entity or to your sector. What we've learned from the past is we would expect a certain product to perform a certain way, or we would expect a certain entity to have certain types of products and certain types of clients. But if you leave the question there, you sometimes get very interesting answers. And then you can start probing, but why does a certain product have certain features, or why does it perform in a certain way? So for the first round, we're not going to make any assumptions, because we really want to understand the different sectors, and we want to understand the market conduct behavior in each of the sectors. When it comes to our legal rights of asking these questions, I'm going to leave that to Johan. We always have a legal eagle on the call to better explain it. But basically, we do have the rights under the FSR Act currently to ask these questions. And you'll see that also in the webinars, we try to explain to you how the development of the Omni-CBR is working together with other developments like COFI, that nothing that you're going to do now or systems that we're going to develop now is going to be for no reason. The one is not dependent on the other one. The timing is very much in line. We're working towards the same end goal here. And it might be that when COFI comes into full play, and it's not just a bill anymore, it's an act and it's applicable to everyone, that we might have to change some headings. But your market conduct indicators and the risks that you're dealing with in your industry won't change, because your licensing talks about activities and not anymore the normal phase categories or whatever. Your risks would remain the same, therefore the questions would remain the same. Being said, in the rollout plan, and that we also touch on in the first webinar, this is a 4-year rollout plan. So we're now in phase 1, where we're introducing it to industry, where we're trying to explain our thinking around it, reasons for certain of the questions, what we're going to do with the information, because nothing is going into a big black hole, where every question that we're asking for a reason. Can be linked to a risk in your industry. It can be linked to a fair outcome to a customer, to one of the TCF principles. Some of them are also straightforward compliance questions, where we as an authority need to ensure that we know that you're complying with what you need to comply with. And we're testing that compliance, and that also gives you some reassurance. So in many of the other workshops, I also try to explain, although it's a new concept to your sector, the market conduct indicators that we're showing here would assist your business, not only in your bottom line, by knowing how to give better service to your customers. Where is there maybe leakages in your process? Where can you improve your process? It will also show you possible gaps that you have in your target market and understanding your target market, or whether the distribution channel being used or the products being used is really appropriate to your target market. So those indicators are very clear in the return, and that's why the return can actually be used as a information report that you can use on a monthly basis. Some of the bigger insurers, after now a few years of working with their CBR, have seen how much that could add to their business, running their business, identifying weaknesses and gaps, and therefore they are running it on a monthly basis. Then, for us as a conduct authority, we need to track indicators. We need to see it across the industry so that we can see where the movement in the industry is. We need to see it from peer groupings so that we can see, is there any outliers there? With other words, are you above the average? If all the banks in your grouping, and we're not just going to group it as traditional banks and foreign banks and mutual banks, that's the 3 main groupings we have in the Omni-CBR, but we also look at your type of customer, the size of your book. And if you're an outlier, for instance, in dormant accounts or accounts closing within the first 3 months, then we need to have that, it will flag with us. It's not there for us to take action against you. It will flag for us and we'll have an engagement with you. And we'll start asking and probing questions here, which would also assist your business, but help us as an authority to understand, is this then the right product for your customers? Is it being sold in the right way? Is it about a disclosure? Is it something small that needs to be done? Is it a follow-up call that could be done to keep this customer? What is the cost involved for this customer? Because we also don't want them to have a lot of cost for dormant accounts that they're never going to use, that there was never really any take-up in, and that wasn't their intention, for instance. That's just an example. With more mature data, we would also be from our side able to do more predictive analysis on the risks in the industry and on identifying that risks and addressing it. Also, one of the things we want to do with the Omni-CBR is you'll see on the company information sheet, there's a lot of information we're asking about the entity. Like your shareholders, your branches, foreign branches, which jurisdictions are applicable to you. Those are the type of things, and your auditor, that we would expect you to update us with. But it's also one of the biggest breaches that we've seen occur is where an FSP wouldn't inform us of any of these changes. And these returns being submitted at the end of the rollout on a quarterly basis, and we're working with calendar quarters, so it's within a month after the end of the calendar quarter. We then also update our systems automatically, which means that we need less information requests going out and data cleanups, because we're able to have up-to-date information at all times about all entities. Okay, so that's basically phase one. I can continue talking into detail, and it's almost like you've seen the webinar. Phase two is when we explain the all sheets about looking at these risks across the sectors and in the industry and trying to pick up the trends. So like we said, we're looking at your return from the one quarter to the next to identify trends and any flags with your entity. We're looking at it in a peer grouping that we would peer you in, and we see if you're an outlier there or not. And then we also look at it as an industry, at firstly as your sector in total for banks. What do we see? What is being flagged? It's much more informative discussions that we can then have. And then we look at it across the industry. What is the movement? If you're part of a group, is the entire group moving into a certain direction? Is the strategy that's being explained to us as a group applicable to all the entities in that group, or are some focusing on a certain part of the target market and something changed with another part, another entity in that group, and they're looking at a new type of product or a new distribution channel which isn't traditional to that group, and we can start having engagements around that. So we also want to see that entire picture for the industry. And I've also said this in other workshops, the Omni-CBR is a storybook. You can't look at one question or one indicator and see something. You will see during today's discussions, and for those who haven't been in the FSP workshops last week, how we can link information between the sheets with each other to get the full picture. And one of the things that we want to see is what is the full cost to a customer in their entire journey in trying to get a product, even products that might be wrapped in other products. And is there a differentiation between treating certain customers a certain way versus other customers? And also we want to see whether there is really enough products and services for your entry-level customer, whether it's an entry-level customer because of the fact that they didn't have formal employment before and they now have employment, or because they're a lower income and they're part of that target market. What type of products and services are being offered to them across the industry? So there are some questions in the Omni-CBR that focuses also on inclusion. There are some questions that focus on transformation, because that's also part of our mandate and we need to start tracking that. And that's what we try and explain about the thinking about the all sheets in the second webinar. And again, there might be things there that's not applicable to you, and you'll put in a 0 for this first round. And in the comments of the first round, it's really about the contents of the Omni-CBR. In the second round of comments that will start off after we publish the updated Omni-CBR, it's more about functionality. So don't expect all the cells to work the way that it should. We already know the ones on the company information sheet, it does not work the way it should. The format isn't correct, but it can customize the return. So what you need to fill in about which customers you have and which sector you have, that all works and you can customize, but don't try to complete the other cells because they're locked and you can't. You'll also see some of the questions, especially on the governance sheet, actually expects a yes or no answer. That is how far we go. The only other open fields that you'll have in the Omni-CBR is the comments box. That's at the end of the tab. So whenever you choose other, anywhere in the Omni-CBR, you need to explain to us what that other is, and that's why that is an open field. That other helps us track what is the change in the industry, new products coming up, new distribution channels coming up. And after this is now fully implemented and everyone is starting to complete it on a full and accurate basis, we have to review this return annually. And we have to make sure that the risks that we see in this return and that we're tracking is still applicable to the industry and applicable to your sector. And that's that part that Cindy also came up with, which we're totally open to now also, about having more questions added or maybe changing a question or adding a channel because it would be more applicable to your industry. And then the third webinar is about your specific business composition additional sheet. So every sector has specific risks, and we do identify that. We take note of that, and we know that we need to ask you questions that are on your specific risks. We also look at what data we expect that sector to have about their customers, and then we question them on that. Which other sectors might not have, because we also consider the PIA Act and what is the information that you would have about your customer and not. And if we expect you to ask anything you don't have, then what would the reason for that be? And we really wanted to make the Omni-CBR as easy as possible without having you to have to go back to customers and getting information that you don't have to try and be able to complete it. It might be more a question of you have it, you don't have it in a report, or you don't draw it regularly, and now you have to build those reports to be able to complete the Omni-CBR, then having to go back to customers to find that information. And that is what the third webinar deals with. So for now, what's important is to work on the company information sheet, customize the return. If you think this is a lot of tabs, if you're a life insurer, you probably have around close to you could have up to 63 tabs, because there we actually go into much more detail into the product levels, and we ask a question on product levels. So the return for banks is quite light still, and that's why we're totally open. We have lots of questions we wanted to add, but also with a lot of consultation with the World Bank and with the CGAP team on customer outcomes and how to implement this, and our learnings of the insurance CBR, we realized we can't ask everything at once. This is a gradual process. You'll see on this one that we published, we already have the XML codes in. Those are the codes that are in the actual cells on the return. So although we expect there would be changes after comments, it might be that a question changes, a term changes, a terminology is added, or maybe a question added, then the XML codes for that would be added, or if we remove something, the XML code for that question will be removed. When we publish the updated Omni-CBR, there will be a comments matrix explaining what did we change, why did we change it, what did we not change, why did we not change it, and it'll be easy for you to track the changes then in the updated Omni-CBR. So building can already start with the XML codes that we have there for the entities that want to submit it via XML. That will be one way of submission, and usually that's for the bigger entities. For the smaller ones, we also have the return that's going to be web-based. So you're going to go into the portal, you're going to see it like you see it now. It's an Excel sheet, and you can then customize it and manually complete it. And certain fields you can also have that it imports from the one session to the other session to be correct. You can go in and out as many times as you want. You can give more than one user access to maybe complete different parts of it, and then have one person signing off on it and submitting it once done. We also maybe just in the webinars that we highlighted is the fact that we know, again, that there's different data maturities in the different sectors. That's why some sectors might only have a year for implementation or a phase-in period before we expect full reporting from them. In all probability, that will be the insurers because they're already reporting and they're now just going into a second phase. And then other sectors, we might give a 2-year phase-in period, which basically means it's a best effort period. For you to submit the returns, you'll have to submit it every time that is expected, whether we expect it at that stage on a biannual basis, maybe in the first year, before we go over to a quarterly basis. We expect your best effort. We would expect a plan from you on how the development will take place so that you make the deadline and what is your progress against that type of project plan. And that is then what will be part of the discussions also that your frontline team will have you about the progress on your development. It is very exciting. It is a lot of system development. It is a lot of resources needed for this on our side as well. And you'll see that's also what we say in the roadmap and what we say in the webinars. We're very cognizant of this fact that on our side, we have been starting building reports. We use the information that we got from the insurance CBRs to start building reports and start building dashboards to help the supervisory team. But there's a lot of work that needs to be done. And we're going to get something like 14,000 returns in at a time when this whole rollout is done, which is an overwhelming thought. But that's why we also need to have a lot of automated systems to be able to draw those reports and do analysis for us so that we can have this type of feedback. And also at the end, one of the objectives of the Omni-CBR is to do benchmarking and to actually give feedback into the industry as soon as we're comfortable with the information that we have, because it is a big responsibility dealing with all of this data to actually give some feedback into industry and what should be expected, what type of turnaround times are we looking at, and where should you be moving? And then it will be on a more aggregated basis, but it will be a good test for you to see where you are against some of the other players, or what is the expected average that we as a regulator expect from you. And with having your conduct standards and having developing systems and now moving away of just looking at complaints, although you'll see we have a whole sheet on complaints, which I think will be the easiest one for you to complete. You'll now see what is the other things that the teams have been talking to you about that are true indicators for us on how that outcome to the customer is and how it affects the customer. Thank you.
Thank you, Juanita, for that very comprehensive overview. I see that we have a very shy audience today. They haven't asked us any questions or made any comments. Please, we don't have a prepared presentation for today. The whole purpose of today is for us to have an interactive discussion. So do raise your hands, do type your questions in the chat function so that we can get this kick started. What we've also posted in the settings for you is the links to the webinars, and we've also given you the email address if you want to participate in the pilot project, which is going to take place next year. Then you can send us your contact details and we will add you to the volunteer list. And then towards the end of the year, we'll contact you to then start setting up your participation. And I see we have Marguerite ready for a question. Please go ahead, Marguerite. You can just unmute your mic.
Okay. Thanks, Charene, and thanks, Juanita, and all of the other colleagues at the FSCA. So, Charene, do not worry, we will not be shy and we will definitely be participating. So we have, maybe just to give a bit of background, what we have done from a banking association perspective is, together with our members, we've actually compiled a list of questions. So it's definitely not me that's going to do all of the talking today. The members are going to jump in and add on and ask questions. Some of them may be a bit more high level and general. Some of them may be a bit more technical. I also need to mention that we have watched the webinars, and well done to the FSCA on those. It was very, very helpful. Some of our questions may seem as if we're perhaps asking something that you have addressed in the webinar, but there is a reason for that, and that reason is for us just to make sure that we actually fully understand what was meant with some of the comments that were made. So if I may, Charene, I can maybe perhaps kickstart the questions, and colleagues, if you're all comfortable, maybe what we should do is start with our general questions, And then from there, we can move into the different sheets. So we'll appreciate it if you can then, as Charene said, put up your hands where you've got questions to ask. But just under general, Charene, the one question that I've got is, you've spoken about, and Juanita has actually more spoken about, the maturity of data, having lots of data, etc. Okay, which is very, very true. But we also all know the danger of having lots of data without context. And there's been some very good examples in that regard. And maybe to bring it back to conduct aspects, one of the examples, something that we've been asking all along with the Kofi Bill discussions, is the extent of oversight by the FSCA, specifically in relation to other role players in the credit industry. And the reason why that's very important is because somebody like a debt counselor can have an impact on a bank's conduct towards its customers. So what do I mean with that? You could potentially, as a bank, end up with a complaint that's lodged with you as a bank, but in effect, it was actually the debt counselor that placed that customer under debt review without the customer really truly fully understanding what was happening. But because as a bank you are one of the credit providers, you together with all of the other credit providers then may receive a complaint, and it will count as part of your complaint MIS or then data. So can I maybe just ask, and Juanita, I know that you've mentioned you're going to have discussions when you identify outliers. But for me, there's a bigger discussion, and that is, how is context going to inform the overall view of this MIS that the FSCA is going to receive, and how is that context going to be obtained? So if I can then start with that one. Thanks, Charene.
Thank you, Marguerite. That's a very good question. We haven't received that before. And as you say, context to information is really critical. Juanita, do you want to go ahead?
Thank you, Charene. Thanks, Marguerite. So I agree with you. Context to what you're receiving is important. And although we can add more questions to give it more context, that wouldn't really assist in understanding, and it will place a bigger burden on an entity to actually complete the Omni-CBR. So we did ask questions, and you'll see if we look at the complaint sheet alone, for an example, ask various questions that are more directed at, although we ask you about your total complaints that you receive, but the questions are also directed from where did you get it from. So we actually have a question there to say which channel gave it to you, how did it come to you. We also talk about how many of the complaints that you uphold and which were settled in favor of the customer, where obviously that would also show us a certain trend. But you also see the main theme around the complaints, the sheet is more about seeing whether you treat all your customers the same, whether you have data on complaints, and whether your own complaints handling process is efficient. And that is what we want to see from a customer perspective, that it doesn't matter whether it's a legit complaint against the bank, whether it's brought through another channel. And when I say it doesn't matter, one of the other workshops, they were very hard on me on precisely the terms I'm using. But what I'm trying to say is, for us, the crux of the matter is, if you're an outlier, and that is your reason for being an outlier, when we have that engagement, then there's something else wrong about, maybe, I don't know, the agency that is using these debt counselors, and we need to address that separate from the bank. But in our questions, what we're looking at is you as an entity. Are you getting your complaints? Are you dealing with all of them the same? Do you record where you get them from? Do you have to do a lot of payments to actually kind of resolve the complaints, or wait for determinations before you resolve the complaints? How many of them are outstanding at the end? How long do you take to resolve a complaint? Because that also shows us efficiency. And those are our main focus areas when it comes to complaints. Yes, we want to know what is your main reasons for complaints. And again, the only way to address the remark about having context to it is you'll only be addressed on it or discussed with if you're an outlier. This problem of having other entities that are actually the culprits in the complaints is not something that is just applicable to the banking sector. We also have it in the other sectors. Insurers have it with intermediaries and funeral parlors. We even have that the investment providers sometimes have it through the banks. We have it that the pension funds actually have it through the 13B administrators that are messing up. So it might not be that entity's fault or a problem in the way that they give service that resulted in the complaint, but we're seeing how do you deal with the complaint. And if you're an outlier, then we need to understand why you're an outlier. And if it is because of a third party, then that needs to be addressed, whether that's within your powers or our powers. I don't know if that gives you some comfort in what it is that we're trying to test. And that also kind of tells you why we have certain questions with those questions on the complaint sheet.
Thank you very much, Juanita. I see Margarita has her hand up again. Please go ahead.
Thanks, Charene. Thanks, Juanita. Juanita definitely does help. But I think my takeaway from what you've now explained is that, because it goes to the point you've made, much wider than only complaints. So my takeaway is that if we know that there is some context that is important when this submission or Omni-CBR is then submitted through to you, is to maybe also in advance, or then when submission takes place, to contact you guys and to say to you, you know, we just need to bring the following to your attention, or please take note that there may be some context that you need to have in addition. So I think that's a takeaway point for me from that. Thanks.
Yeah, and also what we encourage, Marguerite, even for one entity, if there's a spike from the one submission to the next, and you already know the reason for that spike, that's why we have the comments box there at the end of each of these tabs. You don't have to contact us. You can just actually complete it on the comments return, because what would happen is when these reports are drawn and given to the supervisory teams and they're looking at it and they see that you're an outlier, or they see that you're not an outlier, but there has been a spike, they go back to the comments that you completed. And then that also helps us to understand that you understand what's going on in your business and the reasons for things happening. And sometimes what also helps is then when we have the engagement then further to talk about remedial actions, we can see whether the remedial actions are truly sufficient and effective when you compare the returns the one on the other. So you can contact us, but you can also just, because I know we're all very busy, and sometimes you think you still wanted to contact us with that submission, but also for record purposes. If there's a line in the comment box to say you're aware of this, or this is the reason for it, or you would like to have a discussion on this, then we would be aware of it.
Okay, thank you so much, Juanita. Charlene, sorry, with your indulgence, can I maybe ask Lumisa, do you want to come in on the next question?
While you're doing that, we've received a question in the chat function from Paul Lawrence asking about the market conduct regulation of the FSCA being extended to the credit lending industry. Johan, could I ask you to come in on that?
Yes, thank you, Charene. Charene, would you just repeat the question? I had a break in transmission on my side.
Sorry, Johan. So the question is, when will the market conduct regulation of the FSCA be extended to also include the credit lending industry, debt consulting and reckless lending?
Yes, I think, you know, that's quite a broad question. I don't think I have the answer to answer that. All that I can say is, look, there's currently, as most of you know, there's harmonization product processes underway, and we're transitioning of the existing legislation into the COFI bill, which is expected, to go through the parliamentary process, and that's the big project. So there's a lot of things that are currently on hold in terms of not wanting to overlap certain processes while you work on certain aspects of amendments of the legislation, while the COFI bill is on its way through the processes. So I think I do not have a direct answer, but I can come back to you maybe with a better answer on that. Thank you.
Thank you very much, Johan. Shlemisa, your mic is enabled. You can unmute and go ahead with your question.
Yeah, so the question that we have is, does reference to foreign-owned bank require us to include information of our foreign subsidiaries?
So we do have questions in the company information sheet. Sorry, let's just get there. And then I see Juanita is faster on the spreadsheet than I am. So Juanita, if you could go ahead.
So Charene, I think my understanding, we just need to test with the colleagues from our banking sector that is in the call, but when we had the workshops and established the return, we do ask you about whether you have branches in foreign jurisdictions. We ask you who the foreign regulators are, and on the governance sheet, we would ask you whether you have any determinations against you or pending terminations in foreign jurisdictions, but we do not expect you to complete the return for each one of your foreign subsidiaries. That is my understanding. We only want you to complete it for the bank that is registered and under our domain, but those are the questions we ask about other foreign jurisdictions. I don't know if Nosipho or Bongani, one of the banking colleagues, want to just confirm my understanding, but that is we're about your conduct. We don't have the powers to control everything outside, but we do want to know about that because it influences you, but only to that level in this return.
Thank you so much,
Juanita.
Juanita. Apologies, Charene. Juanita has covered it correctly. Yes, we are interested in the South African registered bank. However, we also just want to know if you've got footprint in another jurisdiction. Thank you.
Thank you very much, Nosipho. Cindy, please go ahead.
Thank you, Charene. And I think I agree with my two colleagues now, Charene. And I think it's because, we could be, you could have, footprint in Lesotho, and something happens there that really will affect the whole group. So it's important for us to just get that view. That is from that basis that we have included that part on the return, but not everything that obviously happens in that jurisdiction. Thanks.
Thank you, Cindy. That makes a lot of sense. We do need to understand the impact. Marguerite, go ahead.
Thanks, Charlene. So we still have a few more questions on the company information sheet. So maybe if you don't mind, I can ask Jock, do you want to jump in here from your perspective?
Thank you, Jacques. Just give us a second and you'll have microphone access. You can go ahead, Jacques.
Thank you very much. So my question was, or our question was just in relation to the company information sheet where we are required to capture the name of the shareholders. Just some feedback from the FSCA as to what the expectation is for the completion of that, and perhaps the reasoning for the inclusion on the sheet. And then just to follow on that, is the authority maybe considering possible alternatives, for instance, the capturing of the holding company information, or perhaps just a materiality threshold for the capturing of shareholder details? Sorry, that was a mouthful.
Thank you, Jacques. Juanita is ready and able to answer.
Yeah, thank you, Jacques. So our expectation was to have all the names of the shareholders. to update our records and make sure that, because currently we have all the shareholders on our systems. And this information that you're completing under the business information sheet actually directly feeds into our system. However, Charene and I had a very interesting discussion this morning also about a query we got after the FSP workshops, where Charene had to give me a lesson 101 on now I have to remember the entities. Sorry?
Venture capital and 12J companies.
Yes, the exception to the rule of what we would expect with FSPs, and there we wouldn't see it as shareholders but investors, and we can't have it completed this way. So if you, and I mean that is what makes this great. We worked on it for 2 years, this return. It makes totally logical sense to us what we're asking here and why we're asking it, but we're also doing a lot of updating to our systems. If this for the bigger entities, for instance, does not make sense, or there's so much change in your shareholding because you're JSE listed or whatever the reason might be, whatever entity you are, then that is the type of comment that we would appreciate, because that is something that we then need to look into and maybe change it as to where we place it, or qualify what we mean with shareholder, or, you know, where is the threshold, like you said. So that is a valuable comment, which I recently learned more about, and that we can then consider. Thank you.
Thank you very much, Juanita. And I see that we have Shiksha Maharaj's hand, and then Marguerite. So Shiksha, please go ahead.
Thank you so much and good morning. So just in terms of the company information and on what Jacques was mentioning now around the shareholders and directors. So we wanted to understand, is the expectation for a bank, for instance, such as ourselves, where shareholders and directors wouldn't change on a quarterly basis, is that the expectation for us to still complete this every quarter? So our while the proposition that we had was more around changing this so that it is only asked for us to update this when there is changes to the shareholders, the directors.
Thank you very much, Juanita.
So thank you for that. So this is part of the information that we say that you completed the first time, and some information would not change from a quarter to a quarter, so it would be able to import it into your next return, and it will stay the same. We do expect you to update it every time it changed on a quarterly basis, but if it didn't change from quarter to quarter, the same information will be pulled through. That functionality would be there, and that is also what we would then test in the pilot phase next year, is that all of those functionalities work the way that it should work. But then it wouldn't be that you have to complete it from the start. You'll complete it once correctly and thereafter only amend the changes to make it more practical.
Thank you, Juanita. I recognize Marguerite, and then secondly, we have, I'm hoping I'm pronouncing names correctly, Sakuntala. So please go ahead, Marguerite.
Thanks, Charene. So just Juanita, I'm very glad you and Charene had the discussion around shareholders. It sounds like it was a very good discussion, and we will definitely be commenting on please consider introducing a threshold. Otherwise, it's just we'll have to most probably appoint lots of additional people, and we'll come begging for salaries to pay them.
I wanted to say now, Charene told me, she said in one of the other not one of these workshops, but in a workshop a while back, she made the comment to say, you see, we always do job creation. But that wasn't the intent of that question. But I understand now the thinking behind that, yes.
Okay, perfect. So no, thank you.
Thank you, Juanita and Marguerite. Yeah, we do job creation phase. Compliance officers is a good example of that. Sakuntala, do you want to go ahead?
Oops, yes, thank you. Just building onto that question, I mean, as a public listed entity, I'm keen to understand the rationale for that level of detail, especially when we issue annual financial reports. And how do you then, in terms of ensuring the impact on the business to create that submission, correlate to the annual report that we issue as a Big Four bank? with the level of detail that you require in terms of shareholders, financials, transformation, all of that reporting. So we don't create a full reporting process, and we actually, let the business as well seamlessly integrate this requirement in terms of its current duties under various acts and laws. Thank you.
Thank you very much, Juanita.
Yes, so that's a very good point, and that's actually something I should have touched on also when we did the webinar. So let me first answer the question this way. I keep on interrupting myself when I answer this, when I have so many thoughts. One, like I said, this is a very good comment on the shareholders, for instance. And if there's others like that you could make and we can consider, and that's why I'm saying this is a journey. We'll work on this together to get this return right. And all of us get educated in the process. But then regarding any double reporting of any kind, never mind reporting on 4 different reports, the fact is that the type of questions we ask in this return is different from what you would have in your financials, like you said. Also, your financials go to the PA, and yes, we have memorandums of understanding and certain information can be shared. But if you look at it, if you step back and you look at this return and the level to which we're asking the information, you will see that it is much more to a lower level than what you're doing on your financial statements, for instance. When we want to see about your target market and we want to see about your products, because we do a breakdown of products here for insurers, and that's why you have the product information sheet as well. Not to the level that we would want it yet. It's very high level about savings accounts, check accounts, and we're very open to suggestions if you want to break it down into more levels regarding products. But these are the products, the main ones that we knew where we could pick up risks and trends and that we're worried about and that we wanted to identify and take out of the process. So you'll see that there are some prudential indicators, and I say this in every workshop, so apologies for those that have heard it before. But it is so that prudential indicators are also market conduct indicators. And some prudential indicators will be asked here to use for market conduct purposes, but it will never be a duplicate question because we ask it at a different level. So you'll give the higher level info, you'll give to the PA, and they look at that from a prudential point of view. We look at it here from a market conduct point of view. In terms of the transformation and the inclusion questions, we're again much lighter in the way that we ask it here. So for us, inclusion questions is, for instance, how we break down the target market. You'll see on retail, we used age as a differentiator, and on business, which includes corporate and commercial business, we use the annual turnover of the entity. And this is information that when we had to look at what can we ask across the industries that we know all the entities would have, and they would be able to update on an ongoing basis without any additional costs and going back to customers. This was information we thought that you would have and that you would be able to keep on updating on. Also, we made some assumptions. On the retail side, we made the assumption about at certain ages, you need certain types of products, or you need a different level of advice or a different level of service, so that we can test whether products and distribution channels are really appropriate to that target market. On the business side, we didn't want to go with sole proprietor and a company and whether they're publicly listed or not, because you get sole proprietors that are very big and very strong. There's sole proprietors that are more vulnerable and need more protection and also more service and attention than the next guy. So we went with the annual turnover. You'll also see the phases that we gave was not, or the branches rather is the right word, is not linked to any other legislation currently or what is in other legislation. It was when we were sitting and we were workshopping, this is how we knew the risks were. And we did get a suggestion about even breaking down the last tranche into a further tranche to make it even clearer, because above 10 million is quite a big tranche then, to look at it that way. And some of the So that is on inclusion questions. And then we also have some questions on salary bands, and we have about gender, and we have about race. But that goes to your book of business and your target market, and also to look at appropriateness. So it's a different level of question. And when we look at where you are in your transformation plan, we might be asking questions about your financial advisors and their race. And we would ask about, in terms of your agreements, if you have outsourcing agreements, how many agreements do you have where there are more than 51% Black-owned entities involved? So it's much higher level than the scorecard, for instance, that you're completing. But it's for us just to see that you are on track with this. It's for us to see that we're including all players in the industry. We're looking at it from a different perspective. And it's for us to see that the products, the services, the distribution channels that you're using is appropriate to your target market, and you understand the needs of your target market. So that is the level at which we're asking these questions, which isn't the same in any of the other returns. We really worked hard on to make sure that there is no duplication. If you find that there is a question that is exactly the same at the same level, and we're just asking it again, please do highlight that in the comments for us. We could have missed it, but we really tried not to. We even looked at what you're completing for the credit regulator. Make sure for that.
Thank you, Juanita. I just want to point everyone's attention to Makhompi's response in the chat function, where he gave a very nice explanation and response to the question of supervision of entities outside of the supervision of the FSCA. So thank you very much for that, Makhompi. And then we also have a question on shareholding, or a suggestion from Paul Lawrence, who is saying that we assume that the same percentage shareholding for is used as in the phase licensing, so that you only in phase at this stage report if you have a shareholder that holds more than 15% of the shares. So Paul, I think that's exactly the kind of comment that would be very useful if you would be able to submit that to us. I'm going to go back to the people who've raised their hands and give Tammy a chance. Tammy, you can go ahead.
Tammy, you still muted?
Tammy, that unfortunately does sometimes happen. It's from our side, we've enabled you, but you might have a systems issue on your side. Could we go ahead, perhaps, Marguerite, is someone else able to ask a question from your side?
Yeah, happy. I can maybe jump in here. So still on the company information sheet, in instances where FSPs have multiple licensing categories, okay, so like, for example, category 1, 2, and so on, the return should accommodate for one report to be submitted. My current understanding, and please help me here, but is the expectation that different returns be submitted for each of those? Or is the expectation that a single return be submitted? And keep in mind, Juanita, and I'm saying this with laughter in my voice, when you mentioned that the the CBR is quite light for banks, it's actually the exact opposite, because we have bank assurance divisions, we have, we are like it all over. We in credit, we in IT, we in everything. So just talk us through what's the expectation in that regard, and how do you guys see that practically work, please? Thanks.
Okay, so our rule has always been for every license that you have with us, you'll complete a return. However, through the discussions, it's also become clear that if you're a bank and you're an FSP, and I see there's that comment also in the comment inbox, you'll have as an entity all the same information on your all sheets. It's just you'll have a banking additional business compositional sheet, and you'll have a FSP business composition additional sheet. And we have to see in those entities how we can make it work that you would have one return and just the additional sheet that you need to complete For us, it comes into the same database and we can work out from the reports from there. So it's just in instances where your all sheet information for that entity would remain the same and you just need to have the additional FSP sheet added to that, that we would get that workaround. The same for the insurers where they have all the product information and all the old sheets that's the same, and now they just need to complete the additional FSP sheets, that we have that functionality. And that is something that we'll work in for the second round of comments. However, what we have seen and that we need to take back and look at, and it also came up with the investment provider workshop, is that if you're an FSP and you have different categories, then that is going to be an issue to try and get those sheets all together into one return, just because your all sheets might not cater for that at this stage. And also how we draw the information, what we're expecting you to complete. We need to have a look at that to see how that would work. And also how would we identify that? Is it under different licenses? Do you still have the same license with the different categories, and how would we pull that information? So that's something that we've learned from the workshops that we need to go and take back and look at it from that perspective. But if it is the more straightforward ones like banks and insurers and just need to do additional FSP sheets, that one is easier to work through. The others, we still need to apply our mind a little bit about it. And that was also good feedback that came from the workshops, and that we're going to work on and try when we do our second round of submission, have something ready for you in terms of those answers.
Okay. Thanks, Juanita. That's very helpful, because maybe just to add to that, and Tammy, you're welcome to jump in if your mic is now fixed, or Shiksha, you as well, given the question you've asked. But I think what we also just need to bear in mind, Juanita, is that some of the FSPs, like you've said, operate across multiple sectors, okay? But we also need to recognize that some of them may be divisions within a business that's a legal entity. So it becomes quite complicated, and you don't want to end up with multiple, you also don't want to end up with having to complete 50 Omni-CBRs, because then it becomes quite confusing. Tammy, do you want to add to that?
Tammy, we've enabled your mic from our side, so just try and unmute from your side. Sorry, Tabby, it does unfortunately happen. I think there's an overall MS Teams glitch, just that sometimes hits a specific person. But do go ahead and ask your questions in the chat function. Okay. We have a very interesting question from Reshma.
Sorry, Charene, if I could interrupt. I just want to answer Marguerite and then the comment that I think Tammy did type out relating to this. About is it legal entities if it's a FSP number, and the fact that it could be various FSP numbers and their divisions. So although we'll look at that in the comments when it comes in, it's not per legal entity. That was never the intention, because you also have to remember, from our perspective, we need to risk rate each licensed entity with us. And this tool is important in our supervisory framework into risk rating that entity. We also have to see where that license falls within the bigger groups. So we take note that there could be various FSP licenses in a group, but we also need to understand those licenses then in the group and where that thinking is. And that's why you'll see, I'm just trying to see here over my screen, when we look at the first sheet, the introduction sheet on the Omni-CBR, I didn't place my screen correctly this morning, so I can't see the whole thing, sorry. On the introduction sheet, you'll see that we only ask for the FSCA number. The reason why we didn't say FSP number there, we do ask about your FSP category, also in there, but when we refer to FSCA number, it is because the pension guys have a different licensing number, the insurer guys have an insurer number, you have an FSP number. But the thinking is that a return will be completed for each licensed entity with us. If you're licensed for more than one category with us, we need to try and see how we can make the return work for you. If you, however, have various licenses, then we need a return for each one of those licenses. And if that could result, Marguerite, in what you're saying, that it is indeed 50 returns that then, for instance, need to be submitted because it's 50 different licenses, then that is what we're looking at. That is our expectation at this point. It's also important for benchmarking information. We wouldn't want it to be more aggregated. And then when you do give the comments, what would your suggestion then be for us to still get that outcome in terms of tracking market conduct indicators, in terms of seeing the customers, because each one of those licensed entities have their own target market, their own book of business, their own risks that we need to identify. So we wouldn't expect it on legal entity, but we do expect it on licensed entity. It's only if it's the same entity and you also have an insurer number with us and an FSP license with us, but all the questions on all sheets would be applicable, that we're looking at a workaround for that.
Thank you very much, Juanita. Reshma Kasi asked, on the company information tab, you noted that more clarity was required around the terminology or definitions. So please do include that in your comments back to us, which terminology you would like more clarity on. One of the things that we are very concerned about is that we don't want to kill people with definitions and explanations of terminology. Juanita, I'm going to give you a chance just now to talk about the terminology as well, but there is always a bit of a challenge in that. And then the second part of the question that maybe you could address as well is then that when an entity is in a partner relationship with another FSP, how does that affect your reporting in the Omni-CBR? Do you report on information that concerns the FSP as well, since they will be required to submit their own return? So, Juanita?
Thanks, Charene. So on the first question about the terminology, yes. So when we first did the terminology sheet, we had over 300 terminologies that we wanted to use. And then we realized that currently each sector has their own definitions in their legislation that is applicable to them and that is well known to them, and you're licensed under that legislation and you understand it. So the terminology that we have in the return is really just where we felt we needed to give an extra guideline on how to answer the question so that you understand what it is that we're asking. And it was there where there's maybe complainant, for instance, or complaint that has basically the same definition in different legislations, but there's little nuances, like they make provision for spouses in the Pension Fund Act, where it doesn't make provision for that in the Insurance Act. And then we needed to come up with a description. So we like to say the words in the terminology is descriptions, because they're there to guide you as to what we want in that question and how to answer it. And then we address those type of nuances. We don't want to create confusion, like Charene said, and that is why we didn't give a terminology or a description for every word we're using. If there's, however, a question that we're asking and you feel the question is vague, we need to give a description there, and that came up in some of the FSP workshops especially. Then that is what we need in the comments when you send it back so that we can relook it, and if there's then a real need for that, then to add it to the terminology sheet. In terms of the specific examples that you gave, that is on level 3 on the company information sheet. So level 3 is the activities that we're 99% sure of will remain as is in the COFI bill. They're currently in the COFI bill, and that is the terminology being used, and that will be updated as developments go with the COFI bill. It doesn't affect your customization of the return. However, we put it in there because we wanted industry as a whole to get used to the terminology in the COFI bill. And until something isn't here and you have to know about it, you don't look at it and you don't concentrate on it, or you comment on it and you go on because there's so many other things to concentrate on. So that's for us to start getting information on it, but it's also to assist industry to getting used to that type of terminology being used. So that's directly linked to what is in the COFI bill, and that's why there's not terminology for it currently. In terms of the question about the partnership relationship, yes, every FSP will then complete their own return, but you'll see we ask you about your agreements in the return. So you'll be reporting from your side about your agreement. They'll be reporting from their side on their agreement, because the number of agreements that you have, for instance, outsourcing agreements, other intermediary agreements, those do influence the risk rating that we would give you, because there's more oversight and monitoring necessary. In terms of partnerships, we have questions on ownership and whether ownership can be influenced, and if there was changes in the ownership, and maybe the partnership could, it depends now on the scenario, could fall in there and could have an influence. That is what we ask on the conflict of interest sheet, where we ask you those type of information. On the flow of money, on the money sheet, movement of money, I just remember it's the money sheet. That is where we're talking about how you actually do payments and how you get your funds in and who's holding it for you. So it could be that it reflects there. In terms of maybe your partner is the one responsible for getting some of the income in, and some of it is in that account and not in your account. That would be reporting that takes place there, and all of that reporting then adds up to certain data points that influence the risk rating for an FSP. So your partnership is only a small part of what would influence risk rating, and the risk rating would not be the same for both FSPs, and that's why we need you to complete it separately. Yes.
Thank you very much, Juanita. Jacques, you can go ahead.
Thank you. Just a quick question, Juanita. What is the authority's intended approach and expectation in instances where the terminology used or being provided in the terminology sheet potentially conflicts with definitions as set out in applicable financial sector laws?
Okay, so if we didn't address it by giving this description, so if you complete the return, we expect you, and there is a little bit of conflict and nuances, then we should have caught it and have a description in the terminology sheet. And for completing the return, we expect you to use that terminology. If we didn't catch it, we blame you on, that's in the legal department. That's step one. And then step two would be for you to highlight it for us in the comments when you submit it to us, so that we can see there is still some terminology where we need to give a description. And maybe to touch on this point as well, and that's why comments on the terminology is important. We're working together with the PA on a separate project, the data taxonomy project. And the idea there is that at the end, we're going to have, and I'm going to explain it in layman terms, because that is my understanding of the project and what I've seen with my involvement in the project, is that it's basically a dictionary. It's a dictionary for completing returns. So with other words, if we explain something, if we want something in our return, and we explain this to you, and it's because it's not in any sector law currently, and that is our expectation, that when we use that word and they have it in their return, it has the same meaning. So we're trying to align it. Now, the last update we got, and I'm saying this cautiously because Marilee is sitting across from me and she's our lead on the data taxonomy project from our side, was that the PA would be ready to publish something for comments on this by the end of the year or in the first quarter of next year, where we gave our input, because we basically did the same exercise between the sectors internally, is trying to come up with the same understanding of certain terminologies where there was a conflict or where there wasn't terminology. And we shared that with them, and they had an external service provider that also assisted us and have assisted other regulators across the world in trying to get this dictionary ready. And then the idea is then to also roll that out to the credit regulator and to other institutions asking for information, so that whenever you complete a return for whichever authority, if we talk of that word, that is what we mean for the return, that type of guideline. So that's what we tried to do here. And we actually said to them, we are going to get comments now. We published first with our terminology. We're going to get comments now, and we're going to feed that back into that project so that they can see what to look at before they publish, and see if there's something that needs to change. So if you still pick up something that there is a conflict and we didn't address it, please add that to the comments, because that's also very helpful.
Thank you very much, Juanita. Jacques, do you have a further comment?
Not on this issue. Thank you, Charene.
Thank you. Then Marguerite.
Thanks, Charene. So maybe just to end off on terminology, there are a few things that we've picked up, Juanita. So we will definitely give those through. And just by quick, one example is the definition of financial product that's currently different to that proposed in COFI, for example. But can I just ask on this data taxonomy project? So has the NCR, because from the document, it's clear that the FSCA and the PA has been working together, but is the NCR, the FIC, and the information regulator involved in this project? And the reason I'm specifically asking you that is because remember, and you have mentioned the fact that you did have a look, and I suspect I hope it was Form 39 that we complete and submit under the NCA. But so what's quite important is that whatever, we submit to the FIC and the PA from anti-financial crime perspective, as you will know, because you also deal with that internally in the FSA for other accountable institutions outside of banking. So are all of those aligned? Have those regulators been involved?
No, not at this stage. So the project is rolling out in stages, Marguerite, and the PA is actually the lead regulator in this project. So at this stage, they came to us and we worked with, well, let me correct it. You see, that's why Marley is sitting across from me. It's the SARB that is the lead in that project. So they've involved us and the PA up to this stage. And then that's why comments will be obtained on that terminology for insurance and banks. The thinking is to roll it out to all regulators at the end to have a dictionary that everyone was involved in, but it's in different phases. So we're now in phase 1.
Thank you very much, Juanita and Marguerite. And I think it's an opportune moment to take a break now. We've been going for about an hour and a half, everyone, and it's been going very well. So thank you for your questions and participation. My clock says it's 5 to 12, so let's take a 10-minute break and be back at 5 minutes past 12. So 12:05, we'll be back and ready to deal with the rest of the questions. Thank you so much. Hi, everyone. I just want to do a quick test and see whether we can get Tammy up and running. So, Tammy, if you can raise your hand and just unmute and see whether you can actually speak. Tammy, can you try to unmute because you've got microphone access? Okay, no, Tammy, unfortunately, it seems as if it's not going to, no. Tammy, did you see that you were sent another link to join? So if you can just bear with us for a minute, we are going to be giving microphone access to everyone now. Then while we are giving microphone access to people, Tammy, just bear with us and we'll try from our side as well. It's just taking us a little bit of time. I don't know if you've seen that in the chat function just before the break. Johan also gave feedback on the existing legislation and on the terminology of financial product that was actually based on the legislation that exists at this stage, and it's not aligned completely to COFI as it is still under development, but that will be considered as the consultation process continues. We just have a small technical problem on our side with the microphones. It's not going to take more than a couple of minutes to sort out. So if everyone will just please, in the meantime, type their questions and we will continue to respond in that way. And it will take us about 3 minutes to sort out the microphone issue on our side. So if you can just be patient with us. But I see Juanita is ready to respond. Thank you, Juanita.
Yeah, actually, this was a strategic plan. We saw you came with too many questions. I'm joking. I'm joking. We love questions. People don't believe that, but actually we do, because it means that you took the time to look at the document and consider it, and you're actually invested in trying to develop it with us, which makes us extremely happy because we want this to be a success, and we can only do that if we have your buy-in and if we have your support. So one of the things that I know that came out of the other workshops that we could maybe address is the question about what is charges, what is fees, and what is money. So money isn't the greatest term to use. We recognize it, and we had a workshop just about which term to use. But because it's on the all sheets, it's on the business composition sheet, and because we're talking about the movement of money, we didn't want to talk about flow of funds, because funds has a specific meaning in legislation. We can't talk about premiums or contributions or investments, because all of them have specific meanings, and this is across the industry, it's across sectors. We could also not use payments because that has a specific connectivity to it, and that's why we talk about money. And in your business composition all sheet, you'll see that we ask you in 1.3 about taking your entire book of income, the value of your book of income, and splitting it in between money received, charges, fees, and other. Again, whenever you use other, you explain it in the comments box for us. And if you want to see what charges and fees are, Charene is actually very good at explaining it. She explained it very well in the FSP workshop, but I'm going to take a stab at it. Charges are things that you ask additionally. So I think in the bank's world it's much easier because you have charges for different accounts, you have charges for different transactions, you have to disclose your charges, so that would be more clear. Fees, if you're uncertain about what we mean about fees, you'll see in the conflict of interest sheet, we actually break down a lot of fees for you and we explain those fees for you. And those are the fees that we link up there. Again, not a duplication of a question. This is one of those questions that would link up. We would ask you about what is the composition of your book to see where do you really get in most of your income. And then we link it up to exactly is that what we would expect from you or not? And then if you said it is out of fees, we take it down to the breakdown of conflict of interest sheet, and we look at what type of fees is it where you get mainly your income from. This might be less confusing or less relevant to the bank sector than the other sectors, but I thought since we have some time, let's talk about it and mention it.
Thank you very much, Juanita. Marguerite has her hand up. And Tammy, we're going to try and give you mic access again. So maybe after Marguerite, if you can then go ahead with your question after we've responded to Marguerite. Marguerite, go ahead.
Charene, you're welcome to first quickly test Tammy, and then we've got a question on the declaration sheet, please.
Okay, so let's test Tammy. Tammy, you've got mic access from our side. Okay, doesn't look as if it's going to work. Unfortunately, Tammy, you're going to have to type for us because on our side you've got access, and there's unfortunately nothing else that we can do to activate it on our side. We don't have the function to switch on your computer. We can only give you access. Marguerite, do you want to ask the question on the declarations?
Yeah, please. Thanks, Charene, and Lumisa. You're welcome to also jump in and add on here. But can you maybe just give us some clarity on whether the signatory needs to be a registered compliance officer? That's one of the questions we've got. The other question that we have is, will we need to be able to evidence a sign-off from an ExCo member at business unit level each quarter? We're just thinking about this realistically and practically how it plays out, especially from a performance management perspective, the person that's responsible for it, the person that oversees it, etc. So if there's a need for an ExCo member, it may mean additional steps that have to be taken that prolongs the time period of the overall submission. So maybe if you can just help us a little bit with that, please. Lumisa, anything else you wanted to add to that?
Yeah, no, nothing else. Thanks so much, Margaret.
Okay, great. So you'll see we have on the declaration sheet, we have opportunity for 2 ExCo members actually to sign off on the accuracy of the information. Whether it's an ExCo member at business unit or at group level will depend on the entity and on the group and the decision taken about who's taking responsibility for the accuracy of the return. Practically, I don't think that if you're part of a bigger group, that it would be on group level because it would be very difficult for them to give that type of assurance. They're not that close to the business. They wouldn't pick up anything that looks odd to them. Obviously, in this process, there is reliance, and what we've seen, what some of the bigger insurers do that we've learned from them is they actually have a CBR team. The same as what you would have a team, and very much the same as the team that does the financial statements for an entity, although you can't in a market conduct return only rely, and this is really the truth, on actuaries or financial people to complete it, because the return needs to mean something for the business. And for it to mean something for the business, you do need someone from compliance to look at it and tell you the story that they're seeing and reporting on the story, so that when we have the meeting, everyone of the senior management knows exactly what was submitted and what does that mean. So currently we provided for the 2 ExCo members. Who that would be someone that this is delegated to, whether it's delegated from group level or delegated within the group or within the entity to 2 ExCo members to sign off on it. What we're doing from our side also to try and assist with the accuracy and the completeness of the return is with the new ways of submitting. And this is also something that we've learned because currently the insurers are uploading Excel sheets onto the portal for us. And that makes that we have very limited ways of validating information. With the XML submission and the web-based submission, we can build in a lot more validations. And those validations will stop you from submitting if there is a mistake that we pick up, or if a cell is not completed, or if the format of the cell in which it's completed is not accurate. So we're trying to assist in that way, but ultimately the same as with financial statements, we need someone to sign off. We don't need this to be audited. At this stage, we don't need an auditor to sign off on it, but we do need responsible people signing off on the accuracy of it. If you have other suggestions on who that should be, that is something that you can raise in the comments for us as well. But again, this has to be across the industry.
Thank you, Juanita. I don't see any questions waiting in the chat function. Is there, Margarita, you have your questions well organized. Do you want to go ahead, or Lumisa?
Lumisa?
Yeah, I think there was a follow-up in terms of the sign-offs on a quarterly basis, given that it might prolong the process. So are there sign-offs required every quarter?
Yes, unfortunately, with each submission, yes. Well, it's unfortunate for you, but it's fortunate for us, because then we know that someone did actually properly look at it, and we're not doing benchmarking in industry and giving information back or seeing you as an outlier on information that's incorrect. So we need some assurance from the entity about the information being submitted.
Thanks.
Thank you, Juanita. Shlimisha, do you want to go ahead?
I know that I think that was my last question.
Okay. Can I maybe suggest, Charene, I just quickly want to ask a question, and then Shiksha, if you want to jump in on the business contact retail sheet. So can I just ask, Juanita, you have explained that you have looked at the information that's being submitted to the NCR, etc. Okay, so just talk us through, why do you then request information regarding secured loans, unsecured loans, credit cards, commercial credit, etc.? What will that be used for? How is that going to be used? And I think where the wariness comes in here is that, you know, we do not want conflicting messages to be put out into the market by different regulators. And I'm saying that very respectfully, because as you know, the NCR also publishes their report every few months. So if you don't mind just maybe talking to us a bit about that, please.
Okay, so I'm going to take my best stab at this, and then the banking experts of our department can come in and add to it. And then we also actually have someone that used to do the reports at the NCR also on the call that we now have on our side, this side, working with us on the Omni-CBR. But the products that we chose, so you'll see when you customize the return, is sub-columns on the sheet that you're completing. And so the information that we're asking about it, some of it is about credit insurance policies. So we're linking it up with information that we're getting from the insurance industry versus what the bank has and how many claims the bank is aware of and how big this is, how much of a distribution channel the bank is. And then we're linking up that information in the background. The same as what we do on outsourcing and binder agreements. We're linking up the information we're getting in the Omni-CBR to databases that we have. Then you'll also see the way that we're asking the information in the columns. We ask you to break it down into your sector specific information, into your target market. So by ages, by gender, by race, who has those type of accounts. And that's also important for us, again, from an inclusion point of view, to understand which products are being sold to who, by whom, because then you'll see we go down. We also ask about how many of these products that were new, were rebranded in this quarter, were enhanced in this quarter. So it's different type of questions what you're getting from the NCR in terms of those type of products, and then you had to launch them again. We're trying to track whether you really do market research before launching a product. If you did market research, what then made you have to enhance it or rebrand it in a very short period of time after being launched? And to get that information, we also need to see that on product level. And then when we again go down into accounts and your gender ledger account and the type of dormant accounts and closed accounts and fraud that you have, because I'm just looking at your business composition specific sheet, that's when we break it down to product level. On the business composition all sheet, we only ask it on a bank level in general, and we ask you about your total for your book, and we ask you about who do you sell for, and we ask you about your insurance that you have, and the type of security that you have around it. And then we ask you about the instructions, how quickly did people in the first year, which we break down in the first 3 months and in 4 to 12 months, give you the instruction to either close the account, take the money, transfer, switch, buy another product, because we're looking at the behavior of the customer, not just the behavior of the bank as an entity and what you're doing, but the effect that that has on the customer, the cost that that has on the customer. Also, whether with this whole banking process and with PASA, whether the debit check is successful, whether reversal of payments are there, and then we're tracking that across the industry, and what is the effect of people using the reversal of payments as a type of way to manage their cash flow, and what's the effect on other sectors in the industry, as we're aware that there is an effect. So that's why it's high level on business composition, or that's when you'll only do it for a bank on traditional foreign owned or a mutual bank. And then on your specific sheets, when we break it down to retail and to business, that is where the products come in. And then that is where we are looking at, like I said before, at really your target market for that product. What was the behavior of that target market for that product in terms of age, gender, race? We're asking you about the distribution channels, all of that. So it's not at the same level. And then we also ask you about ATMs and your availability of ATMs, to also see your accessibility to your customer and which accounts are being accessed through the ATMs and the usage of the ATMs, which is also something that's been discussed a lot, even worldwide, and the effects of having accessibility there for different types of target markets. And with branches closing down and the effect of COVID, what was the reaction of the industry on that? And what is the effect to the customer, again, from a market conduct perspective? So the way we look at it and the way that we structured questions is quite different to what the NCR is focusing on and what they're asking from you. That's my stab at it, but anyone could come in and just add if I made anything not clear enough.
Thank you very much, Juanita. I recognize the hand. Nosipho is agreeing with your explanation. Thank you very much, Nosipho. Before we go to the next question from Shiksha, I see that Tammy has just posted a follow-up question or link to the question on sign-offs. And the statement is that the quarterly reporting cycle of the return may not align with financial institutions' governance reporting cycles. And the latter is generally based on the financial year, whereas the FSCA requirement is on calendar year. And this mismatch on timelines may impact on sign-off, e.g. on the accuracy of data. Tammy, that is a very interesting comment, and I see Juanita is ready because I have some experience from the insurers who have similar issues.
Yeah, Charene, and I also think what we need to remember here is for us to be able to do benchmarking, we need all the reports to come in at the same time for the same period. For all entities, for benchmarking in their different sectors, but also if we really want to see what the movement in the industry is, and if we later on want to do some predictive analysis, we need the returns to come in at the same time. And that's why we didn't want to use year ends, because that differs for different entities. That would make it very difficult for us to do analysis on. It would make it difficult for us to give feedback at intervals in the future, at certain intervals back to the industry, because there would be different periods all around. And that's why we use calendar quarters. And yes, that might then mean there's a mismatch between your other reporting and the reporting that you'll be doing here. But what we've also done is we've tried to streamline your reporting to the FSCA. That is why it's all the sectors in the industry reporting on the same return, they're reporting in the same period, the submissions are due, they close at the same time. To keep it simple, to keep it more sleek, we took away your compliance reports in 2018 as FSPs, to really, again, take those risks that we identified there, bring them into this report, make it only basically quantitative type of return. I always have to think quantitative or quantitative return. So it's easier for you to extract the information. It's faster for us to work with the information and to do our analysis. And remember, we also, because it feeds into your risk rating and into the type of engagements we're having with you, we need this information to really see what is it that we need to discuss with you and give meaningful feedback to you as an authority. And that is why we're having it on this. So yes, there might be some mismatch. It might be a little bit extra work, system development, and that's why we're rolling it out gradually over a few years. But that is the thinking behind having it on calendar quarters, is so that we can run exception reports, see what's not in, get it in, and then start doing this customer journey across the industry. For that, it needs to be at the same time.
Thank you, Juanita. That's a very good explanation. Shiksha, you can go ahead.
Thanks, Charene. So just in terms of tab all BC retail, specifically under the product performance, please can we get some clarification on it says number of instructions for made dormant. So it's unlikely that a client will provide instructions to make their account dormant. Should this not be a question or an independent question around dormancy then? So for instance, how many accounts are dormant, values thereof, management thereof, etc.
Okay, so on that, I take your point. Made dormant might not be the right wording. I will, however, have to consult also with the other sectors to make sure that that wouldn't affect them. Regarding the remark about asking about dormancy and the value of it and the number of accounts and that we ask you on your business composition specific sheet. So we know that dormant accounts is something that has been flagged for banks. It's been in the diagnostic paper. We know that it is a risk, and that's something that we're looking at, and that's why we ask it up to a certain level. So there might not be that instruction to make it dormant, rather to cancel it, because you would rather give that instruction. So I take that point, and we can look at that wording and whether it fits in there or not.
Thank you, Juanita. And on that, we've just received a question in the chat function from Jacques de Villiers, who's on the same sheet asking the BC retail sheet. The reference is made to financial products / services / funds, bearing in mind that these concepts are distinct from each other and defined differently. How and what is expected to be reported in such instances? Is the intention that we must report on either or all aggregate level financial products, funds or services as set out in the question and other questions where a similar approach to terminology is used?
Yeah, so thank you for that one, Chalk. Yes, that is exactly our expectation, that you would do it on an aggregated level. The reason why we have it like that / is because it's on the all sheets, and you can't just say some FSPs give financial products and they give services. Some do just products, some do just services, some work with funds. And like the investment providers. So we had to cater the questions on the all sheets so that an entity would understand we want your total value. So it is an aggregated value or an aggregated number that you're giving. On services, we have the business, we have the additional services sheet. So if it's services that are not usually seen with your type of entity, you would give us the information on that sheet, and we would then understand if it's additional services that's not used to being associated, for instance, with banking services. And we do know about that happening a lot in the industry, where there's services being given by an entity which isn't usually associated with that entity or the business that entity does. That again links up with the question about charges, because it could be included in there. But yes, we have it that way so that you know that we're talking about totality and that it would be applicable to all entities completing the all sheets.
Thank you, Juanita. There's no other question in the chat function at this stage.
No, don't worry, Charene.
But
We will just happily continue on.
Marguerite, I'll give you a chance just now, but a question just came through, and also on the all BC retail sheet on the total value. Is it potentially unreasonable to expect an entity to report on this information on a quarterly basis? It is unclear at this stage if this information will be readily available on these timeframes.
Yeah, so this is also something, I don't know whether you attended the FSP workshops that we had a long discussion about, but I think the focus was more there on what is value and from what perspective, because one of the things we had to clarify is it's the value of your book of business from you as an entity's perspective. Reporting on that on a quarterly basis, no, we don't think that that is an unreasonable expectation, just for the reason of, if you're running your business, you don't look at your statements on a quarterly or a biannual or an annual basis. It's actually something that you look at on a monthly basis, if not a daily, weekly basis, because you would want to know what the value of your business is, what happened yesterday, what was the effect on that. So some of the other questions might be raised and say whether you think this is something that is so volatile that it would change on a quarterly basis or not. But when it is about the number of services and the number of products that you have on your book, the value thereof, the new ones that you sold or gave in that quarterly period, the value thereof, to who did you give it to? So with other words, who in your target market did you sell it to, which distribution channel you use, that's knowing your business. And knowing your business is also knowing your customer. And then to really pick up a trend, you need to see that on a quarterly basis. I would even argue that you would need to see that on a monthly basis. Like I said, some of the big insurers have already seen the value in that. So that's maybe something that we can touch on as well. Is we had a lot more questions that we wanted to ask, and there was also a lot of questions that was more on a qualitative basis and more focused on governance and the fit and proper requirements and those type of things, that we actually removed out of this return, so that we can make it only a quantitative return and only use the indicators that we feel is volatile enough that it changes from a quarterly basis, and that you would be able to pick up trends. And remember, one of our parts of our mandate is not just to be more intrusive, but also to be more proactive. So if we don't get this information on a quarterly basis, we won't be able to be more proactive. We, again, would be very reactive, reacting after something happened. Here we need to be able to pick up that trend, see the flags, see the signs, and have those engagements. And it's also to assist entities and assist them in trying to see, what are we seeing? Where is there a gap in the controls, for instance? This is assisting your compliance teams with making sure of compliance. There's so much value in this return, not just for us, but for you as well. And you can do so much with this return. So yes, the indicators that we're using, we believe is volatile enough for a quarterly basis. On that specific indicator, that is definitely, that would be a monthly thing, if not a daily thing that you look at. So reporting on it, the fact that we're not expecting you to have it audited when reporting on it takes away that requirement and that delay about having it go through the audit process and the extra costs involved with that, where we thought, you know, we're actually meeting the industry halfway. Thank you.
Thank you very much, Juanita. Sorry, Jacques, I see you have your hand raised.
Yes, thank you. Also on this sheet, just a question in relation to, I think it's where we are requested to capture the average cost to the consumer or customer to use specific channels to give the entity instructions. Just some clarity on how the authority foresees that we would calculate the average cost to customer per channel, just especially given some possible nuances and unknowns in those channels listed by the authority.
Okay, thanks, Jacques. That is a good question. And that tells me that you really examined the Omni-CBR, because we only got that question once before in a workshop. And that's actually the one that I expected most questions on. So it came from the work that was done by the CGAP team. Now, the CGAP team is part of the World Bank, and they came to South Africa and they dealt with some banks, some insurers, and some FSPs, big and small. And they did a whole exercise on what could be strong customer outcome indicators, and looking at the customer and looking at what is the expectation of the customer and the culture of the customer in their expectation and how that is being addressed. And one of the things is entities keep on saying they're very customer-centric, and culture, we also have to say, is a question that, although we have some straightforward questions on culture on the governance sheet where we just check compliance and it's a catch-all type of sheet, other questions like these that follow through the sheets are strong culture indicators for us. So this one is a culture indicator. And when you use the average cost, we tested this a little bit in your industry, and you were actually supposed to be the industry that would calculate this the easiest because you have the best systems and data when it comes to this. Because when it's face-to-face, when someone comes to your teller, you actually measure the time. This is what I was informed about, how long it takes to resolve a complaint or a query that came in, how long it takes someone to resolve their own query on your website, how long it takes it to do it on a mobile app and on USSD, and you could actually relate that back into what is the cost to the customer. In terms of face-to-face, there I can see some nuances and I can see difficulty there because you might know what it costs from your side. And that's why we also ask on the culture sheet whether you have any free channels for any queries or complaints to also see if you make it easier for your customer. Face-to-face, you would be able to work out what is the cost to you, but not necessarily to the customer. And you wouldn't know whether the customer had to travel or not. So I could see that there's a possible nuance that we could work on. But knowing what it costs in terms of data for a customer to use your other channels that we have there and how long on average it takes them, even on a phone call, to resolve a matter, that should be easier to resolve. We're open to trying to explain how the face-to-face could work and how we could do it from the other side, or whether the guidance should be it's the cost from your side for resolving that. But my understanding is that the banks especially measure this very carefully. Thank you.
Thank you, Juanita. Shiksha, you have a question, and then we'll go to a question that has been posted in the chat function. So Shiksha, do you want to go ahead?
Sure, thanks, Charene. So just two questions from my side. And it's also in terms of all VC retail. So just on 1.13 and 14, it specifically says state the number of records of advice audited, and then 1.14 state the number of sales calls audited. So we just wanted to get some clarity from you in terms of expectation of audited, or what exactly you're referring to there. Is that audited via a QA process or second line of defense audit? We just want your clarification there, please. And then I'll go into the next question.
So Charene is actually very good with that question. That's why she's sitting on this side of me. I'm looking at her. So I'll let her answer that one.
Perfect, thank you. So audited here means monitored or reviewed. So if you typically think of the kind of compliance auditing or monitoring or review, whatever term you want to attach to that, is has someone checked this? Because typically you wouldn't listen or review to every single call, you wouldn't review every single record of advice, but you would review a sample. So if you want to, for ease of reference, change the word to review to make it easier for you to understand, but someone else than the person involved in that specific activity listened to it or reviewed it, read the documents, and made an independent decision as to what was being discussed, and the result of that discussion or conversation or engagement between your sales representative and the client actually came to the right result. So it's a very broad catch-all term, and it doesn't mean the specific audit done by the audit function, but it can include the specific audit completed by the audit or the compliance function. Does it help you?
Sure, perfect. That's great. And then just on 1.15, so it says state the number of staff assisting clients with financial services. Does that include all staff who may indirectly also provide support? So as example is your back office staff that also provides indirect support for our clients.
Anita, do you want to go ahead?
Yeah, you can correct me if I'm wrong, Charene, or any of the banking guys, because they're the experts. I know they've done so many audits on the banks already, but we're talking about number of employees. So employees, staff being the same thing. I'm just smiling because we actually had discussions on whether you use employees as a word or staff as a word. And it would include everyone that actually helps giving the financial service to the customer. So that is involved with the customers. And when you say back end, I wouldn't think that we would include that, Charene. My understanding is more it's the staff or the employees directly more involved in giving the financial service. Because this is about an oversight question about the number of employees and then representatives and then key individuals. But this is closer to the phase world.
So that's an interesting one, because from a phase perspective, my answer would actually differ from Juanita's. So maybe that points to the fact that we need to have more discussions. But I would be interested to know in the value chain of providing this service to a client, how many people are actually involved, not only those people who are in regulated roles, but also the people in the non-regulated roles that we don't necessarily know about as the regulator, because depending on the setup of your entity, there could be 10 people involved, but on the face of it, we only know about 2 people. And I'm just using random numbers. So that could be a very valid comment to make in your feedback back to us, because as you can see, Juanita and I have slightly different perspectives on this, and we've been involved in more than 200 workshops, I think, on this already, and we still get to a point where we get a question and we have different responses. So do make that comment. It is going to be valuable for us to also just see it from your perspective, and if you have any potential problems with responding to that question, then raise it so that we understand that when we take your comments further. Juanita, do you want to comment before we go to the questions in the chat function?
No, I actually just wanted to say it does come from the previous compliance reports, and you know the risk that you want to identify there. So that's why I would go with your answer, but I take the point that we should put it in the comments and then let's see, because no matter which response we give, we need to give our understanding there and maybe an explanation of what it is that we're talking about. Thanks.
Thank you very much, Juanita. I'm just going in the chat function to a comment that Tammy made at 12:39 for those of you who are just tracking where we are in the comment function. And Tammy asked whether the regulator is creating record keeping and reporting requirements on data that are currently not prescribed in legislation, for instance, in terms of the race data. Johan, could I ask you to perhaps respond to this?
Yes, not a problem, Charene. I think we had a similar question, not specifically to the race criteria, but to data that we're requesting in terms of this return that's perhaps not prescribed in legislation. So obviously we have the primary and subordinate legislation that has the provisions inside, but not all of the supervisory information that we require to meet our mandate is contained within that formalized pieces of legislation. So we do have the power, of course, to ask information in terms of the different legislation for the financial institutions, and also in terms of the FSR Act, and we require this information in line with our mandate for supervisory purposes, and those will not necessarily be contained the detail, because obviously, as you know, a lot of the legislation is principle based, and we then ask those questions to see if you have meet the principles. Thank you.
Thank you very much, Johan. And just before Tammy's comment, there was actually a question from Jenna Lee. Juanita, if you could help us with this, it's on the bank's business composition additional business sheet, question 2.7, that refers to customers with dormant or inactive accounts. I'm not sure Juanita or you or one of our banking colleagues could respond to this. The question refers to the revenue or the fund value of the business customer, or the revenue or fund value of the financial institution. So where's the split? I think this is on the institution.
Yeah, so I'm looking at this, Charene. So firstly, just to link up to what Johan was saying, is and he's right, it was raised in the other workshops we had as well. It's not just, so in legislation we have the right to ask these questions, as he explained, But for us to also look at outcomes and for us to also look at inclusion, for us to know that you know your customer, that is why we're asking these questions. And these are questions that we would expect you to have without having to go back to get it, to understand your customer better and the appropriateness of your product. And that is the outcome that we're testing. In terms of this question from Jenny Lee, you are in all our workshops, I see. And I appreciate that because you ask questions on all of them, telling me that you might know the Omni-CBR even better than I do. So if I look at the business composition, the business one you're saying, question 2.7, where we talk about the dormant accounts, yes, and we talk about the revenue or the fund value of those dormant accounts, which is the same breakdown as what we use throughout business for breaking down the target market. So on all the business sheets, it is that way. So on the business composition additional sheet for banks, we use the same breakdown so that we can do the track or the trending. For the business customer, you're asking, it refers to revenue or fund value of the business customer or the revenue of the fund value of the financial institution. No, this is your customer because this is your breakdown. So I'm not sure if I understand what you're asking me. Your customer in terms of, or your financial institution, are you saying whether it's a company or a sole proprietor, it's not your customer, it's then a financial institution? Because remember, on the business side, we're talking about corporate and commercial business. This is the breakdown for that target market, which we ask across all the sheets. So it's also the breakdown that we'll continue asking on the banking one, like I said. So it is your customer, their annual revenue or fund value, and then their account that went inactive. So we want to know how many of the same as what we would ask on the retail side in terms of ages, how many in which one of those categories do you have for dormant or inactive accounts, to try and see whether we can see the link there and where would most of your dormant accounts be on your business side. I don't know if I'm understanding the question quite right and answering it to your expectation, generally.
Thank you very much, Juanita. And Jacques, I see you have your hand up. Do you want to go ahead?
It's the classical mistake of old hand. Apologies, Charene.
No problem. But if you have a question, do raise your hand again. Okay, then I'm going to go to the chat function. Generally, let's give you just a chance, just to follow up, Juanita. So since it refers to revenue or fund value of customers, banks may not have that information if the business customer's entire portfolio does not sit with the bank. I'm assuming it would be limited to the information that you have on hand. We wouldn't ask you about information where you are not the service provider to the client.
No, that's 100%, Charene. This is about you and being able to split the customers that you have for the services and the products that you're offering into these categories, and then looking at the behavior of that customer. So it will be on the information that you have about that customer. I mean, it's the same as with any other sector. We know that people have different investments with different type of asset managers or CISs. So we would only expect that entity to report on what they have in their books and the knowledge that they have about it.
Thank you very much, Juanita. And then if we can go back to the all business composition retail sheet, Marguerite has a question on questions 1.16, 17 and 20, where there is a breakdown of representatives, key individuals, and in 20 financial advisors. And the question is, are the number of representatives, key individuals, and financial advisors as grouped by race referring specifically to those that act in a phase-related capacity, or does it refer to a wider scope? If it refers to a wider scope, further clarification needs to be included in these statistical categories. So looking at this, Marguerite, these are very specific terminology, yes.
Yes, and it is as referred to in phase legislation and as you reported previously in your phase compliance reports.
Okay, so
Thank
can
you
I
very much, Juanita.
go to
And
Charene?
then I think it's on the same sheet. There is a question from Reshma, says that, so that's, I think, question 1.18. Does the reference for branch also include business office, which does not necessarily function as a branch? Just read the question. So, Juanita, I'll take a stab at it, but you're most welcome to respond as well. I think it would include business office, but we specifically ask for branches here, and branches typically have a different definition and scope as a business office.
Yeah, so I think, well, this is great. This is the second time in this workshop that we would have different responses to the same question, because I would not think that this would include just offices, but branches as meant for branches to be. If we look at what is the risk that we're trying to track and what is the risk that we're trying to see, and we want to see the operational ability of an entity and how widely spread it is and how much oversight is necessary there. So that is why I would go with what the traditional meaning of branches, and what we're looking at is that operational ability. But this is another key thing that we can take in and have an internal discussion on, and that should be highlighted in the comments, which is great, because then when we explain to you on what is our decision, we can also explain the rationale for it, because obviously Charene has rationale, you have a rationale, I have a rationale, but that is the risk that we're trying to identify with that question. We can maybe just make it clearer.
Thank you very much. Marguerite, you can go ahead.
Thank you, Charene. Juanita, Johan, sorry, can I just double check with you? So we briefly spoke about race information, which, as you've now gathered from what we've commented, it's not necessarily something that the banks actually gather at this point in time, due to various reasons and also past historical experiences. So how do you foresee the information that the banks don't currently gather, will that then prospectively apply? Because I mean, currently we may be using tools, to get to certain understandings, but it's not to say we gather the actual information.
Okay, so Marguerite, I think what would be helpful for us there to understand is, if you don't gather this information as we would have expected or thought, obviously, because this shows our expectation, what tools do you have? Again, for us, and that's why we're very open to other suggestions of trying to get other indicators, we need to understand that you understand your target market, but also about the inclusion aspect and whether certain products are being developed for certain parts of your target market, whether there's a gap in that. One of the things that we saw now with the report on what happened in COVID is how many Black female women who used to be more the caretakers at home had to join formal employment because of the fact that they needed to generate an income and couldn't be the caregivers alone anymore. And they then stepped into the financial industry and needed products and needed services and assistance. And that is a new gap and a whole new part of the industry that grew, and that is very vulnerable. And you'll also remember the FCA brought out that paper on vulnerability, and that a entity should know the different levels of vulnerability of their client, but they go into a lot more detail about knowing education and disability and all of that as well. But just knowing about, and salary bands being another thing, but just knowing about the age and the gender and the race of your customers, the very basic ones that we make assumptions from. If we could have more detail, that would be great, because then it would be less assumptions and more accurate analysis that we could do. But that is the reason for the questions. That is what we want to track. That is why we want to track it. If you have other tools to get to that, or a different indicator we can use, that would be a great suggestion. If you don't, but you're saying across the board, this is not something that the banks have, it's something that you can ask going forward. Maybe even our segmentation as we have it there is not accurate. You would suggest a different one. Please do say that in the comments. Again, we have to make it that that this is information that can work for you and for us, and help us understand the industry better and the vulnerabilities in the industry better, and for you to understand your suitability of your product and your distribution channel better to your target market.
Thank you, Juanita. And I see that Nosipho would also just like to add on this. Nosipho, go ahead.
Thank you so much, Charene. Thank you so much, Juanita. So from my side, I just wanted to confirm with Marguerite that when she's saying this information, the bank is currently not collecting it. What does that mean? Because in terms of the application forms that you complete for an account or for any product, that is a requirement. Is it collected but not captured? I just want to understand the difficulty in the bank not having this information. Thank you.
Thanks, Nosipho. Marguerite, would you be able to respond?
Yeah, I can give it my best shot, and members are also welcome to join in here. But so under H lambda, for example, we are required to capture the race for loans that's originated in terms of that act. Okay, but we don't capture, so that block may be there, but we have many customers who in the first place don't complete that block, and then we don't capture that information on loan application forms if it's not captured there. So we may use, and Juanita, you've now actually spoken about Black-owned enterprises by women specifically. That was one of the challenges that we faced when we did analysis for the loan guarantee scheme, because it's not information that we will necessarily capture on our systems currently. What we will do is we may rather use a derived software to then eventually derive that information. And we may look at things like African names, but if you've got a traditional English or Afrikaans name, then obviously it's not going to pick it up. So this is something that is quite big within the banking sector, and we will definitely take it back and then make some comments in this regard and recommendations as well. Thanks, Juanita.
Thanks, Marguerite. We note that. And thank you for your question as well. It's interesting. You think that the information is available, and then in a conversation like this, you pick up that it isn't as easy as you would assume it would be. I don't see any other questions in the chat function at this stage. Marguerite, you've got your hand raised. Do you have more questions?
Yeah, maybe just to add on to that, is also, on specifically this aspect, if I could perhaps ask again, just to what extent has there been engagements with the information regulator, because this also speaks to the collecting, the processing, and this sharing of special personal information. So maybe just whether those engagements have taken place, and then, having listened to what we've now said, to what extent would the FSCA be willing to give consideration to a prospective approach? Thanks.
Thank you, Marguerite. Do you want to go ahead, Juanita?
Yeah, so one, we didn't engage with them on that question because we really thought you had that information already. And remember, in the beginning of the workshop, we said we considered the POPIA Act because we didn't want you to go back and get information that you didn't have, but that it would be information that you have and can report on an ongoing basis. So if it had to come in and we leave it in based on the comments and internal consultation, it will always be looking forward. It wouldn't be going back on your book of business. And by time it would, it takes much longer then to filter through until you have information on your entire book of business. And then we'll have the discussion about why it's needed for us. But in terms of processing special information like this is information that we would need to fulfill our legal mandate, to understand about inclusion and understand about protecting the customers, and also looking at where the need is for more financial education and how we can work with industry in terms of that, and also some reporting that we have to do as an authority to big organizations that we are part of about, what is the movement in the industry, where's the vulnerabilities, and what have we done to include the more vulnerable in the target market. So We're not concerned that the question wouldn't be able to be included in terms of the POPIA Act and our mandate and expectations. It is something that we'll discuss also with our legal counsel if the question had to remain, because there's definitely, like I said, for each question here, there's definite reasons for the question. It would then be going forward and in time filters through your book. But again, we're very open to if you have other tools, or you have a different indicators that we can use to see the same thing. We're very open to those suggestions. We were really of the view that this is something that the banks have as general.
Thank you very much, Juanita. Siksha, you can go ahead.
Sure, thanks so much. On the tab that references banks BC add business, so we note there's a question around stating the number of credit insurance sold, but it's generic across all products. Would it not be more insightful if we split it so it's credit insurance policies sold per product, a credit product, for example, personal loans, home loans, credit cards, and so on? Sorry, Juanita, you're on mute. There we
Sorry.
go.
I again blame Akasha. It couldn't be my inability as a user. Yeah, I mean, come on. So again, coming back to our remark in the beginning, we don't want to make assumptions now, although our logic tells us that credit insurance policy should only be sold with certain type of products. You would put in a 0 into the cells that it wouldn't be applicable to. Then we know you also applied your mind and it's a definite 0. And in our further customization, it would then gray out for that those cells would gray out for those products that it wouldn't be applicable to them.
Okay, sure, makes sense. And then can I just ask one more question before we move off? It's a general question. So just in terms of all of the business tabs. So we noted on the return that there is impact on our CIB clients, our corporate investment clients. But we'd like some clarification on how the FSCA sees the wholesale banking business impacted by the submission. So just because of the nature of CIB, we're of the view that the current format of the return doesn't necessarily cater for the type and volumes of the data that would be expected to be inputted into the return. Our recommendation would be more of going along the lines of having a separate submission specific to wholesale, but I'm not sure your thoughts on that.
Okay, so I think we need to understand better why would you say that the current, because I'm looking at the return and I'm trying to understand why you would say it doesn't cater for that type of business.
No.
So you're saying that how we have it under investments, you have too much data, it wouldn't be in here, but wouldn't it then be that the investment provider would be reporting on it in more detail?
No. So I'm saying it does cater for, well, some of the questions cater for our CIB clients, but so just because of the nature, the type and the volumes of the data that we put in may skew all of the other data. So say, for instance, there'd be 10,000 trades that would come through on a day and that number gets populated. There's not enough subsequent questions to unpack those further.
Okay, I take your point on that. That is also a very valuable comment that you can make, and even suggestions for questions how to unpack that better for us to pick up the trend accurately.
Sure.
Would be very valuable. This has been a great workshop. We love it. You show us our mistakes and you show us how to improve, and you're adding categories and questions. So this is the type of workshop we love. So please add.
You can see that not only is Cindy very excited about getting feedback back from the banks, but Juanita loves this and she really would like us to add many more questions. We have lists and lists of additional questions that we would love to get answers to, but we haven't included it in this return because we thought that would frighten everyone to death and we don't want to quite do that at this stage. I don't see any new questions in the chat box. Marguerite, can I go back to you?
Yeah, thank you so much. So I just want to ask the following, and sorry, remember now that I'm not this closely involved operationally, so it may sound as if I'm asking the question that has already been asked. But Juanita, so just talk me practically. okay, through how entities that are dual regulated by the FSCA and the JSE is going to report, because I mean there's now segregated mandates for each of these. So if you think of let me see. So reference is made to CIS and or a hedge fund in the questions relating to the number of portfolios. Okay, but the segregated mandates are also portfolios which fall under the JSE. So how do you foresee that reporting taking place? Again, so that we don't get that discrepancy, between where all of the information is reported on to different regulators, entities, etc., and reports come out of those. So just help me with that, please.
Okay, so I'm going to take my best stab at this, Marguerite, and then I'm going to rely on the experts in the banking department to also come in. And I know our legal eagle had a call right now. I think he knew this question was coming in. So for us, the entities regulated by the JSE falls into a different category. And maybe that is something that we need to make clear, is where that exactly that distinction is on who would be reporting here and how this reporting wouldn't interfere with that reporting. And that's maybe a very valuable comment for us to take back and have discussions on in terms of that. But again, if there was then a level of reporting to any entity that is on the JSE, you would see that the reporting is again not the same, because we're looking at it from a market conduct perspective. They're looking at it from a different perspective. But according to my understanding and knowledge, we don't have entities that are listed on the JSE that we expect Omni-CBR reporting on. But that's, that is also not true, because we had insurers and things that are also listed and they had to do Omni-CBR reporting, so that's not true. We'll have to look at whether there's any possible conflict there in terms of that reporting. Now, the more I think about your question, Marguerite, there will be entities on JSE reporting on the Omni-CBR in the various different sectors. We do expect that reporting from them. This has not come up before, not in any of the workshops over the 2 years, that there could be a possible conflict. But let's have a look at that. That is a very valuable comment. It's not something that we think was an issue, but it might be. So let's look at that. There again, I will learn something new.
But to pick up on that, Juanita and Marguerite and your colleagues in the banking industry, if you have specific examples of questions and comments that you think you're already reporting to the JSE on, and it's a different feedback that we require or duplicate, let us know what those specific concerns are.
Yeah, I think one thing we should all recognize is a market conduct return that needs to work for various sectors across the entity and across the whole industry. It's a mammoth task to develop. And to know all the nuances in the different sectors, there's none of us that know everything about everything. So that's why we wanted to do the interactive workshops, learn, see what is the barriers, understand the comments better. And we also open the invitation to, if you want to have a one-on-one discussion with us before you submit your comments, please do indicate that to us. If you want to be a part of the pilot, you can indicate that, but that's later on. If we get your comments and we don't understand it, like some of the comments in this workshop where I said, just explain it to me so that we can think about it. We know from our side, what is the indicators we want to track? We know as a market conduct regulator, what do we want to protect? What do we want to see? Where do we want to see the tracking? And where do we want to see the flagging? And what have we learned from the past where we could have been more proactive? And we're trying to correct that. And then we did international benchmarking as well. But if there's things where we're a little bit off because we're not in the industry, or because the market conduct also, especially for banks, is very new to us, and we need to change some of the questions, or we may be overstepping here or there, or there could be a conflict, those are the type of things that we would really like comments on and would really like to discuss. We didn't believe that there's any of that in here. We double checked all double reporting. A conflict with the JSE, that I must honestly say is not something that came up in the 2 years and that we did not check, and that I'm not aware of that there's any conflict, but please write that and indicate that for us so that we can investigate it and be sure of what we're asking, that there's no conflict.
Thank you very much, Juanita. Marguerite, you have your hand up. You have more questions. Please go ahead.
Yeah, thanks, Charene. So we've got a few questions just from a general perspective as well. Lumisa, do you want to start with these, if you don't mind?
All right, I'm here. Sorry, give me a second. So we wanted to know, will the report be set up in such a way that we can automate our inputs into it, or is this so that we can prevent, having to submit it manually and doing it all over again? See, Juanita is smiling there. Thank you.
Yes. So we are sympathetic to the industry and all the reporting that needs to happen. If you are able to do it with the XML codes, that's an automatic pull that will come from your systems into our system. It comes through a switch. I'm explaining it in layman's terms as IT has explained it to me, but we're pulling that information out of your systems into our database. So there's a switch. If you're a smaller entity, then like I said, on the web-based submission, you can actually customize it the first time, import some of the information out of your files. There can't be links to it, but you can import it. And again, this will be part of the second round of consultation, and then you can comment on how good we do our explanation of how you submit, and then we'll have IT people in the room that can explain in a much better detail, and you bring your IT people and then we'll talk to each other. But basically then there's certain, especially the static type of information that will import automatically. You'll get a return like that, and then only have to complete the information that would have changed in that quarter to also just lift the burden a little bit.
Yeah, all right, thank you. And in instances where financial institutions are not able to provide the data at the level at which is being requested and the best estimate value is used, will that be allowed? Or can institutions say that this is an estimation of the value?
Yes, remember in the phase-in period, which we expect would be 2 years for banks, this is a best effort basis. So we also, if you look at the rollout plan, we only expect that the final CBR with all the functionality after the pilot and all of that would be September next year. Then reporting will start. So I think that the first report is due in January 2023. And that will all be then in 2 years from there on a best effort basis. So we wouldn't expect you to give us accurate information. What we do use for that first round of submissions is to make sure that everyone has the same understanding. So there will still be engagements with you and the frontline team to make sure that we all understand the questions the same, that there's none of these little nuances that came out, that we don't have to refine anything further or give additional guidance, because as much as we can have these workshops, you can't have everything all in one. As you practically start building the systems and completing the returns, you realize, what is it that we mean with this terminology? And things might come up, and then we'll have to give further guidance. So in that period, that is one of the main things for the frontline teams to have that engagement with you, but also to see that there's progress, and then to see where you have no information. Why do you not have that information? Is it about systems that have to be built, or reports that have to be built? Or is it something that you never had where other entities in your sector do have it? And then you need to have that discussion. And that is what the phase-in period will be used. So that's also why we won't fine you in the phase-in period, but where you might meet with you more regularly, depending on your submissions, and trying to assist you to get to that stage where you have complete and accurate reporting, because that's where we want you to get to.
And in terms of the frequency of reporting, is there, some leeway in reconsidering the quarterly report instead, given the amount of data that is being required and the fact that we might not have it currently packaged in the way that you require it?
So, as a regulator, because you work with the industry, You're never allowed to say that's a hard no. So I can't say that. But in this phase-in period, we would, for instance, say, let's do it on a biannual basis and give you more time to build the systems and give you more time to get the understanding right. Because we also know that's an expensive exercise. And we know that you might have to get external service providers to help you, and they're also helping other clients. And it takes time to do that. And Charene and I have the argument regularly, that's why she's looking at me, about should certain sectors have it as biannual for more than just the phase-in period and then move over to a quarterly return. In terms of, so those arguments, yes, I can see how we can have it maybe when it comes to the cooperatives that really have to start from scratch, and maybe the FSPs that work out of the boot of their cars. But when it comes to our banks and the systems that we expect banks to have in terms of all the risks that you're facing, in terms of FIC risks as well, in terms of how important you are in the industry and how the fall of even the smallest bank, because there are only a few of you, could have a real systemic risk for us. And the type of information we ask is the type of information we would think for a bank also to need to have to be proactive, even on the all sheets. I can't see how an argument would be made that we wouldn't need it on a quarterly basis. I can see that you might need it biannual for the entire phase-in period, for instance, to assist you in giving you time to build, but not when we're at full and complete reporting, because you're just too important to the industry for us to allow that. If I can put it that way.
No, happy. Thank you.
Thank you very much, Juanita. Shlemisa, before we go back to you, I'm not sure if you have more questions, but we've received a couple of questions in the chat function. So if I go to Tammy's question, where she was saying that not all questions are applicable to financial markets clients, such as asset managers. Tammy, I'm not sure whether I understand your question fully, but there are quite a number of very specific tabs and questions for asset managers. So if an entity is an FSP that is an asset manager, we have a number of very specific sheets for asset managers. So have you looked at that, or is it a different comment that you have? Maybe if you could expand on that. Juanita, I don't know if you want to add anything to that.
No, Charene, I don't think that I really understand what Tammy's saying. She's referring to a question that was asked previously, and we didn't fully answer it, of Shiksha. Sorry, Shiksha, if I'm saying your name incorrectly. So if I have to think about the discussions we had, so out of the asset manager workshop that we had on investment providers, we realized that the word asset manager might be confusing, and we need to define that better into the different categories for FSPs and the licensing, so that you would know where to click that. Currently it's under investment providers. If you look at the company information sheet and you customize, and then you would see the specific annexure of information that we need from asset managers, and they have their own specific business composition sheet that they need to complete over and above the all sheets, and you won't see that if you only customize for banks. But I don't know that I really understand the question otherwise. Sorry.
Thank you very much. So Tammy, please pick it up with us. And if you want to pick it up with us afterwards, we're most happy with that. Then Nias Abraham from JP Morgan is asking two questions on the all governance sheet. So on the all governance sheet, the first question is on 1.10. Can we please provide context on the request to provide the number of systems used? In a global firm, obtaining this data will be difficult. And can we also clarify what is expected under payment and administrative systems? Would this include screening systems, reference data systems, etc.? If you could respond to that before we go to the second question, Juanita.
100%, Charene. So yes, so when we okay, let me explain what is the risk we're looking at, what indicator this is for us, and then go down into the naming convention that we used. So what we wanted to know about the number of systems you use and how regularly you change systems, because we've also seen there has been a movement in industry where they're trying to put systems together so that you actually have less systems, more control over your data. And that is one of the things, the more various systems that you use to do various functions, even when you outsource these systems, you do heighten your risk in terms of having controls over those systems, having those systems not have any downtime where the one system could affect the other system, where you could have cyber attacks. In terms of that, we wanted to understand and also how the systems speak to each other in terms of trying to give ultimate service to the customer. And if there's delays in how they speak to each other and how they work with each other, I know there's very strong rules in banking about which system can give information to which, especially if you look at the bank assurance models. So insurance is my first love and passion, since those are the ones that I look after and understand the best. So I know that when they want to share information or get information from the banks, there's a lot of red tape around that, and they can't be easily sharing of information. And that was even before the POPIA Act. So I know banks are very secure on their security, on their systems, but even internally about sharing of information. So that is why we wanted to know for your own risk rating about how many systems do you have, and if you've made any changes into the system, because that would heighten then also your risk rating to us. And our discussions would be about how did this flow of taking information from one system to the other system go, or implementing a new system. When we look at the naming conventions, we try to, when we workshopped it, to come up with naming conventions that would be easy to kind of understand across the different sectors in the industry, into what it would entail, and also not to break it down into 20 different naming conventions, but rather into main groupings. So this is actually groupings, and that's why we're asking about the number of systems. It could be that you only have one system, and that is all that you have, and you would only say one and you would say 0 for the rest. Or it could be like we provided for there, that you have one system that does a few of these functions, and then you use a specific system for dealing with payments of funds or of money, and all the other systems do all the rest for you. In terms of what is back end and front end, and whether it's administration or not, that is really something that you'll have to internally look at and see how it would fit into those groupings. We're also very open to comments about there should be another grouping there. We really used main grouping, so anything that has to do with administration, front end or back end, would be a system for administration. Then it's the one working with your money. Then it's the one for collecting money, payment of money, and then also for your complaints handling. Those were our main groupings, but you're welcome to give us other suggestions for more groupings. But that's basically what we're working with there, and that affects your risk rating.
Thank you, Juanita. The second question is on the same sheet, and that would be question 1.15, where we ask, has the entity been exposed to any cyber attacks? And the question is this limited to successful or all? And we didn't specify that it's only successful.
Yes, because we wanted to know on all, because again, that would give us an indication of the possible risk of that entity. So it would be on any of the cyber attacks that you have. And we're looking at developing joint standards on cybersecurity and all of that. But I mean, as banks, and especially if you're part of global partners, there's a lot of security that you have for this. So whether it was successful or not, we just want to know your exposure. And maybe then to interrupt myself and get back to the other question about being part of a global, like JP Morgan, part of a global group, and you talk about systems, it will be all the systems that you need to use to do your function here in South Africa. So it could be a global system and you're all working on the same global system, and there's just segregation that happens in terms of South Africa versus the others, because everything can't be the same. But maybe your administration is the same across, because again, if that's a global system being used across, it's a bit of a bigger exposure, especially for cyber attacks. So again, I think if people understand the reason for the question and what it is we're trying to track and how that feeds into your risk rating, you might better understand how to answer it. And that's what's great about these workshops, and again, why we want to have individual discussions on it. But yes, if you're a global entity and the systems that you're using is linked to the global group, you'll count the systems that you use here in South Africa and you'll report on that.
Thank you, Juanita. We have a very interesting question from Vuyani, who's asking how the return will affect the financial institution's risk rating. Will the rating change with each quarter submission? And how will it be different to how the risk ratings are determined currently?
Okay, so your Omni-CBR is a strong offsite monitoring tool in the whole supervisory framework that informs your risk rating as an entity. So it's one of the pillars. If you had to see it as a house, it's one of the pillars that you have. Your type of target market that we get out of this. So the fact that you can submit quarterly, that you can complete it, and that it's detailed would have a weighting in terms of your risk rating. Then certain information that we get out of there in terms of who's your target market, the number of products, the number of systems, certain things like a lot of changes in your staffing, things like that in terms will go into main categories as we have it for culture, as we have it in here for target market size, distribution. So it will feed into that. All of them have different weightings that feeds into the main risk rating. And then obviously also the engagements that we have with you, information that we ask on the engagement could also then feed into those main categories or the main pillars. And we determine risk ratings on an annual basis. All of this gets feed into your risk rating, and you could flag from a low risk to a high risk in one quarter. That's possible if something is picked up. It will have to be a lot of things that went wrong there or a lot of things that flagged for that to happen. And then there would definitely be engagements. And then engagements might not be on a quarterly basis anymore, but on a monthly basis. It depends on what happened. So that would feed into that, but we have our strategic planning sessions towards in the last quarter of the year. And we then look at the risk rating of entities and we look at all the information we gather during the year to inform that risk rating. How it's different from now is we're trying to automate our processes more and not have these manual processes. For the banking, it's a lot different because you didn't have so many indicators that could weigh in on your risk rating as what we could do when we have this information, which would make it a more holistic view. And it would make more a balanced risk rating because we're getting the same information from all the entities and we're having information on various indicators. That's how it would differ.
Thank you, Juanita. Nosipho, I'm giving you advanced warning that I'm going to throw the next question at you, and it's a comment from Jacques de Villiers, and it's on the bank's BC additional retail sheet, question 1.21 and 1.22, where there's quite a breakdown of distribution channels. And he is saying that the channel breakdown is the same for both questions. And can we provide clarity on the distinction between the two questions and what is expected? For instance, is the distribution channels used for interaction focused on sales and ongoing interaction channels focused on interaction subsequent to sales? So Nosipho, would you be able to respond?
Yes, thank you so much, Charene. So I think from our side, that was a duplication because really what we wanted to understand is the utilization or the take-up of the distribution channels. So as the banks are moving towards being digital savvy or are moving forward in their digital strategies. So there's a take-up of customers that will prefer digital platforms. Some customers still prefer to use USSD. Some customers prefer to use branch network. So we just want to see in terms of the customer base, what is the utilization of those distribution channels?
Thank you, Nosipho. Juanita, do you want to add to that?
Yes, so maybe just to add to that, it's not a duplication of the question per se. I think we can get comments in on that if you feel that it can be seen that way. But as Nosipho rightfully pointed out now, that question was to see the utilization of the different distribution channels at point of sale. That is what we're asking at 1.21. At 1.22, we wanted to see the utilization of that distribution channel throughout the product cycle. So while you're having it, and that's why you'll see social media was removed from 1.22. because obviously you're not using social media on an ongoing basis to deal with your product or to interact with your product. So that is so the one is at point of sale and the other one is on an ongoing basis. We wanted to see if that same distribution channel is still being utilized by that target market for that product. And we feel there is value in trying to know what is being used at point of sale and what is then continuously used and whether it's the same or not. It could be that if we have data of a year or two that we could see it is really the same and we can collapse it into one question, or at this stage it could be different. Your point of sale, because of campaigns that you're running and you're targeting a certain market, is a total different distribution channel than the one that's being used on an ongoing basis. And then we need to understand that behavior of the customer as well.